I welcome everybody. I posted a video in the afternoon, and this is a follow-up video of the same. And I'm going to talk about the importance of stop loss. You know, in trading, it's a very important cornerstone of risk management. Stop loss. Like here, I was trading in the morning, and if I see now, I've already booked a profit here of 11,502 rupees. This is my futures and options account that I trade with my traders, and I have a few option strategies that are going on in my other account. I I started my day with losses. In fact, I was long into Nifty, expecting a slight pull back, but the pullback never came, and it was my stop loss that saved me in the morning with 3,429 rupees. And this trade in the morning was a long trade, not a short trade that I was carrying from yesterday. And if I would not have put a stop loss, and if I would not have taken that 3,429 rupees of loss, with the market going down almost 100 points, the loss would have been close to about 10,000 rupees. So the very purpose of a stop loss is to make sure that your small loss never becomes a big loss. Stop loss will make sure that you are in control. In stock market, what is very important is to find out whether you are in control or not. And once you're trading with proper stop losses, then your control over the trade comes on. So let's see with an example. If you remember, go to my previous video, which is in Hindi. I was short on Reliance here. So let's take that particular trade. I was short on Reliance somewhere around this level. Let's go here, and it was somewhere around this level where I was short on Reliance, around this level, and I had a stop loss above this swing high, roughly a little above that, and it was actually this high that I used, and the price went up and hit my stop loss. So I felt bad because the stop loss was hit, but eventually the price, you know, took me out with a small loss, and then it again gave me an opportunity on the way down, and I could not only recover all my loss, I could also add some more profit into it. So when we are entering into any kind of a trade, one thing we have to remember and plan for is that we can be wrong. Every day will not go according to you, and in that case it is very, very important that you trade with proper stop losses so that your trade remains in your control and your small loss does not become a big loss. So how do you put a stop loss? You put a stop loss by deciding where will you get out. Let's take let's say Bank of Baroda. This is Bank of Baroda, and I'm seeing that today Bank of Baroda is down 15%. There is a merger news. The market has not liked it, and Bank of Baroda is down by about 15%. And it is right now there is panic in Bank of Baroda that you are looking at, and Bank of Baroda is going down, down, and down. But at some, like here, it is also becoming attractive to buy because it is coming back to the old level where the up move started. So all those people who shorted Bank of Baroda here, they are getting an opportunity to go long on it and to cover their shorts, booking profit in their shorts. Ask yourself, if you are making 15% in a day in your short position, would you book profit or would you take it to the next day? There's a good chance that you might take it to the next stage. So this becomes a good buying opportunity in Bank of Baroda. And let's say you want to buy Bank of Baroda at this level, but there is a chance that Bank of Baroda might, go further down, break this level and go down. Your reward to risk ratio in the trade is good because if your target is just the gap filling from where it came down, it is a brilliant reward to risk ratio that you are seeing here. But then you can also be wrong and price might break this level and continue to go down. So if it continues to goes down, this one is a big loss zone. So that's why you have to have a stop loss. What is a stop loss? A stop loss is an order which will take you out of the market with a small loss in case the trade does not go according to you. In case the trade does not go according to you, it will take you out with a small loss. If you have bought something, then your stop loss order would be a sell order, and if you have sold something, your stop loss order would be a buy order. But in any case, the job of a stop loss is to make sure that your position remains in your control. That's why when you are taking a trade, even before you enter inside it, you have to decide what is your maximum risk taking capacity. And a thumb rule is when you're doing short term of trading, uh, you cannot risk more than 5% of your capital. And assuming that you will indulge in 4 to 5 trades, your risk cannot be more than 1% of your capital in a single trade. For example, if you have about 1 lakh rupees of capital that you are trading with, and you plan to take 5 trades, you cannot risk more than 1,000 rupees in a single trade. This will keep you on the track, and this will make sure that your trade remains balanced here. So always trade with a stop loss. And sometimes people have this problem. So when I put a stop loss, this stop loss you know get hit. So then you have to understand and learn how to put a stop loss so that it will not be hit almost 80% of the time by understanding the movements of the market. So by understanding the movements of the market, if your stop loss remains intact 70-80% of the time and allows for the required volatility into the market, then you can plan your trade beautifully into the market. Well, this is Bank of Baroda, and the market is about to finish, and we see Bank of Baroda is, around this level is where Bank of Baroda is coming now, and forming a double bottom. And if somebody wants to take a buy trade in Bank of Baroda, it would be important to put a proper stop loss and then enter into the trade. So every good trader trades with a proper stop loss. Before I close, let's look at the market. So if you remember, these are the lines I had drawn almost a week ago in my trades. And these is the first trend line that the Nifty has broken. Now it has comfortably broken the second trend line also. And on a 38% fib retracement, it is coming now the third time. And third time, when a market comes on a level, the level becomes weak. The level becomes weak. And any break below this level can take it to the 50% retracement level. And since here, the analysis said about 11,200. And we can say that, is it my analysis? No. This is how the charts behave. I'm just trying to read them as they are. And this might be a good level where, short covering can be initiated and some buying can come. So Let's look at the market tomorrow and see how the market reacts. Another stock that is going down is Reliance. You can see Reliance is gradually turning down, and about 1,000 rupees is a fair valuation of this particular stock. And if more weakness persists into it, it can continue to go down. Another stock which was expensive and where some profit booking is expected is TCS. And of course, we have Bank Nifty, which has also gone down today. Let's have a look at Bank Nifty. How do you put proper stop losses? To put a proper stop loss, you need to understand the movement of the market, technicals, the various levels, and according to that, you can put a stop loss. You can see Bank Nifty is also correcting. In fact, the correction in Bank Nifty is more severe than the correction that has happened in the Nifty here. So correction in the market continues. The daily and the weekly trends of the market are gradually moving towards the yearly trend of the market here. And trade with proper stop losses. It will help you. And trading is a skill. Learn about it. Below this video in the text, there are two links of free webinars that I have conducted. One is in English, other is in Hindi. You can click on the link and you will get a recording of the session free, and that will help you understanding the market. There is a 2-hour introduction there that you can listen to. Thank you very much for listening to this. Do not forget to subscribe to the channel so that you get the latest videos which I update regularly. And happy investing and happy trading. And see you in one more